Global index provider MSCI has recently announced the results of the quarterly review of its global standard indices. While Adani Group stocks have survived expulsion from the indices amid a free float review, 4 of its group companies will have their weightage reduced on the index. Now, these 4 stocks include the group's flagship firm Adani Enterprises, along with Adani Total Gas, Adani Transmission and ACC. Now, 8 Adani Group firms and associated companies are a part of the MSCI Standard Index, and their cumulative weight prior to the rebalancing stood at a little over 3%. Now, the effects of MSCI Rejigs can be significant as many institutional investors and asset managers use the MSCI indices as a benchmark for their portfolios. Now, if a company is added to or removed from the MSCI index, this can have a significant impact on the demand for its stock and therefore on its price. Similarly, changes in the weightings of individual stocks within the index can affect their relative performance. Now, one reason why Dalal Street has its eyes glued to the changes in MSCI index is because several foreign investors use the MSCI indices as a gauge to invest in India. Now, analysts believe that the reduction in weightage in the Adani Group firms would lead to an outflow of around $428 million. Now, according to Nuvama Alternate and Quantitative Research, Adani Enterprises is expected to see $161 million in outflows. It could be followed by Adani Transmission, which may see an outflow of $145 million. Adani Total Gas could also see an outflow of $110 million, and ACC is at risk of seeing an outflow of as much as $12 million. Now, among the other notable changes, HCL Tech, JSPL and Shriram Finance also saw reduced weightage on the index. On the other hand, Bluechips like Reliance Industries, HDFC, Infosys, ICICI Bank and TCS saw an increase in weightage. Now, Nuvama sees inflows of anywhere between $17 million to $38 million for these index heavyweights. Let's also talk about the fresh additions on the Global Standard Index. Bank of Baroda from the PSU banking pack was added to the Global Standard Index. This PSU lender has caught FII's fancy as they have upped stake in the lender by over 1% in the December quarter. Remember, the stock has rallied over 40% in the last 6 months. Now, according to Nuvama's estimates, BOB's additions to the coveted index could lead to an inflow of nearly $145 million. Hence, this MSCI inclusion could provide further bullish momentum to the stock. Now, CG Power too has been included in the MSCI India Index, while Biocon has been excluded. According to the brokerage, the pharma stock risks seeing outflows worth nearly $70 million as a result of the exclusion. Meanwhile, the MSCI India Domestic Small Cap Index will witness 24 additions and 5 deletions. Recent listings like Campus Activewear and Delhivery have made their debuts in the MSCI Small Cap Index. With a market cap of a little over 12,000 crore rupees, Campus Activewear may be a little expensive as it has a price to earnings ratio of 110. However, it is still cheaper compared to its peers like Metro Brands and Bata India. Well, for more such videos, keep following Money Control.